Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Tom Keene, along with Paul Sweeney. Join us each day for insight from the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.
The best chartist in the world.
Jurrien Timmer, he is the director, Global Macro.
Jurrien, I believe it's a bull market off this jobs report. Does this reaffirm your enthusiasm for stocks?
Yes, this is a report in line with the soft landing thesis, or it's kind of a Goldilocks report. 3.9 U3 rate, of course, gets us another step closer to, as we were discussing the Taylor rule, to minimizing that gap between the actual unemployment rate and full employment, and so that it's one little step in the right direction for the Fed to say, okay, we're at 5 3/8. Maybe we can start giving back a couple of rate cuts. I don't think it's going to be more than a couple,
right.
But this report points in that direction, and it is not weak enough to really question whether the economic expansion remains in place.
The lift to the equity market with the VIX 13.86. Again, commercial free for you for the hour. Jurrien Timmer, thank you so much from Fidelity. Greatly appreciate that. In perfect timing. I get goosebumps. Our bookers are just killing it.
Exactly.
I mean, they called up Mark
Brilliant.
Zandi and they
Blowing
begged.
the break. Brilliant.
Here's the book, Paying the Price, Ending the Great Recession and Beginning a New American Century. We're looking for the new volume of this. Mark Zandi joins us now from Moody Analytics. Mark, with the resiliency of this economy, with what we saw from Apple yesterday, I guess we get a Jerome Powell-friendly jobs report. Is it a new American century?
I need to write another book, Tom, but thank you for plugging the book. That's probably you can buy for 5 cents on eBay, but appreciate that. Yeah, I need to write another book, but yeah, it feels like the American century to me, doesn't it? I mean, the U.S. economy is what's the word? It's rip-roaring.
Well, let me go there, Mark. Dr. Zandi, let me go there. You and I studied at the altar of Ed Yardeni. He says it's like the roaring 20s off the pandemic of 1919. Is it the roaring 20s for Mark Zandi?
Well, roaring that kind of ended badly, didn't it?
Yeah, it
did. No, I don't think that at all. I think the American economy is on very solid ground. It feels really, very good to me. This report, feels like soft landing written all over it. It should allow the Fed to begin easing interest rates. And, I've been reluctant to declare victory saying a soft landing until the Fed starts cutting interest rates. I think that would be premature. But, a report like this, you get a couple of good inflation numbers, and they start cutting, I think we can declare victory. We soft landed. 10-year
yield in 12 basis points. We're declaring victories for open houses this weekend for the real estate business. Mark Zandi, 2008, 2009, he was the committed optimist. We will come out of that horrific Great Recession.
Exactly. Tom, I'm just looking at the top live reporting and Enda Curran from Global Economy Reporter saying, this is important for the inflation debate. Average hourly earnings for all employees on private non-farm payrolls rose 0.2% versus the consensus of 0.3. I think the whisper number is probably a little bit higher than that. So that's kind of a key data point that the folks at Bloomberg News are focusing on. And Mark, I'm looking at, again, the 2-year Treasury, the one most sensitive to kind of maybe rate changes in the Fed, off 13 basis points. Is that the market telling us that, yeah, probably this Fed cut is back on the table?
Yeah, indeed. I mean, it's not premature to conclude that way. I mean, at the end of the day, we got to get those inflation numbers that the Fed's looking for, something close to their target. And they need more than a month, probably a couple 3 months. But this is really consistent with that kind of forecast. So feels really, really good all the way around. And I do think we're going to get better inflation numbers. I do think what we saw in the start of the year was residual effects of the pandemic, some measurement issues. I
Right.
really think inflation's coming in.
Futures up 60, Dow futures up 512, 1.3%.
Wow.
The Apple NASDAQ lifts 1.6% as Dr. Zandi says a wow statistic. Paul, here's a number with the revisions. Thank you to Enda Curran and all. And it's Scott Landman running our economic data now. I teared up when I saw that. How about this? 175 take away 22, and I think that's a 153,000 with revision, and that's way below what Sarah Wolf was saying was
earlier.
the run rate for America.
And Richard Flynn, managing director at Charles Schwab UK, says the report is a sign that demand is slowing in the labor market. So, Mark, I'm looking at, I guess the unemployment rate came in a tick higher here at 3.9%. Is there a number out there, do you think, where the Federal Reserve, whether it's 4%, 4.5%, will say, boy, we got to just jump in and start easing right now? Is there a number you think that gets them a little uncomfortable?
I think anything over 4. My sense is full employment, unemployment is south of 4. I mean, that we got there back before the pandemic with no wage growth, no inflation. We got back there this go around. Wage growth has been decelerating, consistent with an economy that's at full employment. So anything over 4, and it's also not only the level, but the change in. I heard you had Claudia Sahm coming on later. That's, of course, something that she focuses
Yeah, she didn't
on.
want to come on. She wants to listen to you first. Continue.
Oh, is that right?
Yeah.
Well, give her my best. She's great. And, of course, if you get these if you get increases in
Right.
unemployment of more than a few tenths of a percent in a short period of time, then that kind of signals historically that you're getting into kind of a self-reinforcing negative cycle. So I think anything north of 4 anytime soon, I think that
Right.
would start to say, hey, my view is the Fed should have been easing even before all of this. I think they achieved their mandate. I think they got the economy at full employment, and I think
Right.
underlying inflation is at target. Exclude owner's equivalent rate, go to harmonized inflation, you
Right.
are at target, and they're taking a chance here with keeping rates up. So I think that it won't take a whole lot for them to start cutting rates.
Headline from Bloomberg. Thanks, Rich, for this. Traders pull forward first Fed rate cut to September from November. Zandi thinking they should have done that in September of 2023. Mark Zandi, you drank the Kool-Aid at Pennsylvania. We just came off Apple with a 110 billion share buyback.
Yeah.
Can you aggregate the American labor economy? Or are we so polarized between the madness of tech success, American exceptionalism, and half of America, as you've studied for years at Moody's, flat on their back?
Yeah, it's a great point. These are great times for the folks in the top third of the income distribution. I mean, I don't know if this is hyperbole, but it feels like it's about as good a time as it's ever been. Maybe that is the roaring 20s. Middle third, it's okay. It's times have been better, but they've been worse. It's more typical. Folks in the bottom third of the distribution, obviously very tough time. That inflation that we suffered back in 21, 22, early 23 really did a lot of damage. They had to turn to credit cards and consumer finance loans, and now they're paying a lot of interest on that with the high rates that the Fed's engineering here. So those folks are really struggling. Now, the American economy can move forward without the bottom third, but it can't flourish. So yeah, that's a problem. That's a big deal, and one of our key vulnerabilities.
With us, Mark Zandi of Moody's Analytics scheduled Claudia Sahm. She said she wouldn't come on until she got a brief from Dr. Zandi. Claudia's waiting to come on as well. Paul Sweeney and Tom Keene with futures up 58, Dow futures up around 500, NASDAQ up 1.62%. Yields plunged. There's no other word to use. A 2-year yield down 12 basis points from 503 days ago to 4.75%. We thank our sponsors. We are commercial free until 9 a.m. Paul?
So, Mark, let's step back here and kind of put into your economic model what we've seen from the labor market today, what we've seen from inflation data over the past couple of months. What's the growth outlook for you guys at Moody's here for this economy for the remainder of this year?
Good. If GDP is our benchmark, it was up 2.5% last year, which, pretty incredible, thinking that most economists, a lot of CEOs thought we'd have a recession last year. Not only was it no recession, it was a great year, 2.5%. It's going to be at least 2.5% this year. So very, very solid growth. It feels like job growth is slowing. It's going to moderate, but that goes to improving productivity growth. And most fundamentally, what's really encouraging is we're getting these, after suffering these massive negative supply shocks, the pandemic and the Russian war in Ukraine, we're now benefiting from some real substantive positive supply shocks.
Right.
The productivity improvement and foreign immigration, although that poses a boatload of challenges, the benefit of that is it creates a lot of folks in the workforce and they're taking jobs and pulling off the labor market.
Mark, I'm assuming you studied under Lawrence Summers' father at Pennsylvania.
Yeah, and his mom.
Yeah,
his mom.
and had that honor as well. Larry's carrying the torch of stagflation. Powell threw Summers under the bus at the press conference. There is no stag, there is no inflation. And that sounds like Mark Zandi. Mark Zandi, is there stag, is there inflation?
Just the opposite, right? The solid growth and moderating inflation. And as I said earlier, I think inflation's already back to target. Go look at harmonized CPI. The way the Europeans measure it, they don't put in owner's equivalent rate because we can't measure that even in the best of times. Certainly now when the housing market's upside down and all around. So if you really want to get to underlying inflation, take a look at harmonized CPI. The BLS produces it. It's an experimental measure. It's been below 2% for more than, 9 months. Right. We're there. So stagflation is just the opposite. We're getting good solid growth with moderating inflation. So this pessimism that I hear from Larry, I just don't get it.
We're harmonized right now. We are thrilled to have joining us with Mark Zandi. Claudia Sahm joins us right now. Her impact on economics in the last 18 months has been extraordinary. She's chief economist at New Century Advisors. We wanted to get you on together. Claudia, I hate to say this, but Dr. Zandi was saying nice things about you. Mark Zandi, a question for Claudia Sahm, please.
Well, Claudia, were you able to hear what I was saying earlier? Agree, disagree, push back? What do you think?
So I heard the last part about no stagflation. I wholeheartedly agree with that. And I think you could put me on just loop about how I think Larry Summers has been too pessimistic through this whole cycle. So, no, this was really the first data point we'd gotten this year that says, hey, we could get that soft landing. Which is,
Can I ask one more question, Tom?
Please. Oh, no, Dr. Zandi, please take over the show and ask a question. Here, Zandi of Moody's.
I think the low on unemployment, correct me if I'm wrong, Claudia, I know you look at it really carefully, it's like 3.4 not too long ago, maybe 6-9 months ago. We're at 3.9. Your rule of thumb, your heuristic would say we should be nervous about recession here in the not too distant future. Do I have that right? And what would it take for your alarm bells to go off that unemployment's rising too high, too fast?
Anytime we see the unemployment rate rise, we should keep an eye on it. That's not a good thing. Now, I look at, and this is for the unemployment rate and in general, I look at the 3-month averages. And so the low that we saw last year was 3.5% of that 3-month average. And today we're on average at 3.8%. So 0.3 percentage point rise. Sometimes that comes into a recession, but it is not a reliable indicator that we are in one. That reliable indicator would be a 0.5 percentage point. So it's, like I said, we should always pay attention to rise in the unemployment rate, and yet there are not alarm bells here.
Let me bring in my colleague, Paul Sweeney. He's just sold out of his 2-year yield with a gain price up, yield down. Paul, to Dr. Zandi and Claudia Sahm.
Claudia, I'm wondering if you're in the camp that thinks, this Federal Reserve is already behind the times here, that they should have already been cutting here, that inflation has been whipped. Are you in that camp or no?
I saw the case, I think, by the end of last year that we should be cutting interest rates. They're a good bit in the restrictive territory, and if you want to be out of the way when you get to the dual mandate, I'd rather they do that in a gradual way as opposed to having to cut massively if a recession happens. And yet, this is a tough one. I get it. I thought Jay Powell really threaded the needle this week and pushed back on we're going to need to hike. Things are accelerating with inflation. And I think that narrative needed to get, set aside. So I in the range of things that I could imagine the Fed doing, they're doing a good job.
I mean, the heritage here we've got, folks, with Claudia Sahm, Michigan economics, and Mark Zandi out of Pennsylvania. It's really quite special. Mark Zandi, with that said, and let's say the Fed has a fan distribution of becoming measured, do you assume they revert back to a Greenspanian measured quarter point torture of lower rates? Or can they be more Burnsian-like and actually get something done in a Claudia Sahm way?
Well, I think that depends on the economy and inflation, right, Tom? I mean, if the economy kind of throttles back, stays close to, its potential growth, then I think it's a quarter point at a time. I think the thing that's complicating things for them this go around more than in other times is what is that neutral rate, the so-called R star, that rate which is consistent with policy, neither supporting or restraining growth. We came into this period thinking 2.5%. That's kind of sort of what the Fed's got penciled in their summary of economic projections. But it's not 2.5, right? It's not 5.5 where the funds rate is now, but it's not 2.5. It's higher than that. It's not, so it's unclear where that is. Very unclear. Atypically unclear. And so given that, I think that would call for more caution in lowering interest rates. Lower it a little bit, a quarter point, a quarter, take a look around, see what's going on. And I think that's the way it goes. But if something breaks, in the financial system, in the economy, or whatever, the labor market, was kind of softish coming into this report.
Right.
If you look at the JOLTS numbers, I'm sure you roll over them when they came out earlier in the week on hiring rates and quit rates. The only thing that's keeping the labor market kind of together is layoffs are so low, but that can change very rapidly. Business psychology can shift. And you start seeing some layoffs, then they'll start cutting more quickly. But I think barring that kind of a scenario, it's going to be, as you said, Greenspanian. I think that would be the way to describe it.
And Paul, what's important here is this goes to what we learned today at the Fed Decide show. When it goes rapidly. Yeah. That was a clear message from our many good guests.
Claudia, given this labor backdrop, the update we received today, what's your view of this U.S. consumer here? Mark, was suggesting that there are some folks that are, obviously doing well in this economy, but a lot of folks that aren't, that are getting left behind. What does the labor data tell you today?
The labor data is very much consistent with the rebalancing, the moderation. We've seen some big gains in the past that just frankly weren't sustainable. I mean, it would have been great if they were sustainable, but we are, if you look at kind of the 3-month pace, with the payrolls that we got, about 180, which is pretty close to where we were running before the pandemic those years. And that was a really good expansion. So we're at a solid place. Absolutely. Always there are people left behind in the United States. Like, that's a whole other conversation. And yet we do still see the consumer out there buying. They're not happy campers with what they're having to pay. And yet inflation adjusted, you keep seeing the consumers. Now, if we lose the labor market, like if we go past moderation into something that's really weak, we are going to lose the consumers, and then we're lost.
I want to wrap this up in the next 3 or 4 minutes with a good response from both Dr. Zandi and Dr. Sahm. Here on Jobs Day, again across America, futures up 58, Dow futures up 500, yields lower yields, price up. Mark Zandi, let me go to you first. You mentioned the harmonized CPI, which Jason Furman, I believe, talks up as well at Harvard. We're going to have a CPI report come out. Do those numbers, is inflation countable anymore? Or is Jerome Powell, Mark Zandi, and John Tucker, are we flying blind when we look at inflation, how to measure it?
Well, month to month, it's hard to put a lot of stock in the numbers. I mean, because they're up and down and all around like any economic data, they zig and they zag, and there's all kinds of measurement issues. And, especially in this environment, in this period, because we're post-pandemic and seasonal adjustments very hard. We got residual effects of the pandemic. But, the broader trends, I think we've got a pretty good grip on it. I mean, just take a chart, it's the CPI or the core consumer expenditure inflator for the last 10 years, you can clearly see what's going on. Pre-pandemic, we were suboptimal, inflation too low. The pandemic, then we had the Russian war, and we were high inflation. Now we're coming in. We're not quite back to target. We're pretty close. That general kind of trajectory path, that's reality. I feel pretty good about that.
Claudia, you were at Michigan, where they basically invented the study of inflation, the modern study as well. Which inflation statistic series, rather, do you use, Dr. Sahm?
I think at this point, I gotta look at CPI like everybody else. Now, I will say, I think it is very important to go into the guts of the CPI. The Fed does that too. They look at every shred of data in there, and there are very unusual factors in this cycle that all go back to COVID, and I can still see echoes of COVID in there. So I think that's an important piece. But honestly, the CPI the Fed wants is the July one, the September one. Like, we are just not good at forecasting CPI, and so the best we can do is really look under the hood and sift through all the details and see what's in there.
I guess one of the thoughts here is just kind of, how do you think our good friends at the Federal Reserve are kind of taking in all this data here?
Did you see Zandi as president of the Philadelphia Fed?
Oh, absolutely.
I mean,
no problem.
It seems like a natural.
It's a pay cut, but
I'm very happy in my job. I got the best job on the planet.
I'm just working on it.
Literally the best job on the planet. Yeah.
All right, so Mark, how do you think our good friends at the Fed are kind of digesting this morning's data?
Oh, I'm sure they're enjoying their coffee and cereal and Eggs Benedict. This has got to feel really good. I mean, it's, the economy's moving in the right direction. They just need a little cooperation with the inflation numbers, and I forecast lots of stuff, and some of the stuff I'm confident in, some forecasts I'm not. I am quite confident that inflation's coming in. We'll be back within spitting distance of the target here in the not too distant future. Maybe on a year-over-year basis, maybe it'll take, this time next year, but I don't think they need to do that before they start cutting
Guys,
rates.
take a memo. This really worked. Claudia Sahm, thank you so much for joining us today with Mark Zandi. Claudia Sahm with New Century, Dr. Zandi with Moody's Analytic, of course, and we look forward to seeing him at the Federal Reserve Bank.
Sure, exactly.
Your daily look at the front pages, not with Lisa Mateo. John Tucker with the headlines. What do you got, John?
I feel we've given kind of at least I have, short shrift to this
I
story.
agree. I was just thinking that. I was reading the story, yeah.
The most significant antitrust trial in the past quarter century. It's wrapping up in Washington. They did began hearing closing arguments yesterday after the 10-week trial. The DOJ, of course, accusing Google of suppressing search rivals by paying tens of billions of dollars a year for anti-competitive agreements with the wireless carriers, with the browser developers and device manufacturers. And they unsealed some of the court documents this week, so we got to look at what they've been paying Apple. $20 billion in 2022 alone to be the default search engine on iPhone as well as the Safari browser. Google, for its part, argues competition in search had never been more varied or significant.
Yeah, what's the
here's
case?
the bottom. I'm reading the Bloomberg reporting on this. If the Justice Department finds that broken antitrust laws, in theory, they could break up the company. And the last major breakup of a U.S. company was AT&T back in 1984. That's the level we're talking about. I need to get a legal mind on this to say, hey, where's this going to shake out here?
Jennifer Rhee from Bloomberg Intelligence.
What are they doing wrong? That's what I don't get. They pay them so that the search engine's Google, which we all use every day. What are they going to do? Give us Bing?
Let's hope not.
Bing will work on your BlackBerry.
You should have been a witness for the defense.
I should have been a witness. We need Bing next.
Let's do this Washington Post story. This is focusing on Ukrainian men. Now, we heard recently about Russia's use of chemical weapons, but Ukraine desperate for soldiers, according to this report, to reinforce the crumbling defenses. Ukrainian embassies have now temporarily suspended consular services for fighting-age men, so it places new pressure on them to go home to fight. The suspension of citizen services, this is like passport renewals. It's intended as a preliminary step to a new mobilization law that goes into effect May 18th. It does require all men ages 18 to 60 to update their personal information with a local draft office within 60 days.
18 to 60?
Yeah.
Oh, boy.
There is martial law there, prohibits men ages 18 to 60 from leaving the country. But a lot of men who are afraid of being sent to the front, they already fled. So that's that story.
Okay.
Fascinating read on the Bloomberg this morning about the father and son duo behind Carvana. and the drive toward riches. We're talking about Ernie Garcia II and Ernie Garcia III. They've added more than $11 billion in their combined net worth since December of 2022. That's when Carvana stock fell below $4 a share. The company was forced to restructure debt. That was then. This is now. The shares jumping 34% yesterday to the highest in more than 2 years. The company reported, of course, stronger first quarter earnings, revenue topping analyst expectations. That one-day surge pushed the older Garcia's fortune to $10.9 billion. His son's net worth climbed to $3.8 billion.
Guess who's on the board here? A name from the past.
Who?
Dan Quayle.
Oh, wow.
Yeah.
I did not know
They're
that.
not going to do a $100 billion share buyback. Their EBITDA margin is 5 cents on the dollar. And their free cash flow is just now turning positive.
Yeah.
I'll give them that. But
They still have $6 billion in debt.
have you...
look at the chart.
I'm afraid to ask. John Tucker, have you used Carvana?
Good Lord, no.
This stock peaked, pandemic peak, when you couldn't get a car anywhere. In August of 2021 at $360
So it's
a
a
share.
pandemic
And then
story.
it went down to literally in December of 22 to $5, $360 to $5,
Yeah.
and here we are back at $116.
Yeah,
so
Lisa
the volatility
Abramowicz
of this
loaded the
name,
boat on it.
Exactly.
She mortgaged one of the kids.
Let's do this one from Politica.
Please.
A couple more here. All right, so you're an aspiring politician. You're a politician. You want to go even higher. So you write a book and tell everybody how you shot your dog?
Oh, boy.
Go figure. Kristi Noem's damage control tour in full swing appears destined for the same fate as her late dog, Cricket. She, of course, says in her new book she shot bad-behaving Cricket. And then the reason she did this, she thought it would show voters and everybody that she was the type who could make a tough decision like that.
Oh, there you go.
But at Mar-a-Lago, even before the revelation about her dog, Politico says Noem had long ago been cast aside as a likely running mate. That's according to 6 people close
How
to
can
former
you have a
President Trump.
VP from a state with 3 electoral votes?
Yep, South
I don't
Dakota.
get it. I don't get it.
I'm
I'm making the number up.
I'm looking
folks,
on the
but-
bio screen on the Bloomberg terminal for Kristi Lynn Arnold Noem, the governor of South Dakota. Hobbies, hunting.
Oh,
So
yeah,
there
well,
you go.
that's how you get elected out there.
Hunting puppies.
Pheasant
Yeah,
hunting.
Let's finish up real quick with the Journal. Decades ago, if you asked Americans who envisioned a Wall Street commuter, you'd picture a guy like Paul.
Yeah.
Man in a dapper 3-piece suit, reading the paper on the train from Connecticut. But if you visit corporate offices today, you'd be forgiven for thinking the male execs had hiked in from a yoga studio.
Yeah, like Damien Cesar.
Exactly.
Cesar's got it done cold.
He's in the office today.
This is
I
a
saw him.
much memed finance bro uniform, the dressing as if challenging your spouse to remain faithful. So they talked to a couple of personal stylists. They said a lot of men are over-invested in clothes and hybrid tech fabrics that straddle exercise and office attire. So
John Tucker, thank you so much for
just go
giving
to
us the
Brooks
entire...
Brothers.
Yes.
Yeah, Damien Cesar, look. John Tucker, thank you so much. The newspapers as well. This is the Bloomberg Surveillance Podcast, bringing you the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.